for retail investors new to this concept of an NAV, could you share how NAV is calculated and what impact does it have, especially for many of our new investors who have tuned in to watch this?
So what the NAV, the full form is net asset value, right? So simply put, what it means is that at the portfolio level, right, when you buy a mutual fund unit, right, you're buying overall portfolio, right, and you're getting some part of that portfolio, which is by way of the units. So the portfolio could be invested across various asset classes, okay. But if you take a simplistic example of an equity portfolio, right, which is invested across various stocks. If we take a simple large cap fund, which could be invested in say around 50 odd stocks, right? So the net asset value means the market value, right, at the end of the day, right? What is the market value of all the underlying stock in the portfolio, and a summation of the value of all those investments. That is the market value of the portfolio, and then divided by total number of units, okay, which are outstanding, will give you the net asset value of the NAV, as we call it, of that particular fund. And that is the I mean, that is the value of the unit, okay, which investor has invested or is willing to invest. Or if you want to purchase a new unit, that is the value, okay, which he will have to pay at that point in time. So in a simplistic example, it's basically the market value of all the investments in the portfolio, right, divided by the total all number of units, is the net asset value. And most of the cases, the market value is reflected on a real time basis, right? Okay, because in mutual fund, at least most of the investments are there is a market price attached to it in the market on a daily basis. Unlike say in a P investor or unlisted securities, where the market price is not always very transparent and you have to derive that market price. So this reflects the true picture of the underlying portfolio value at on a particular day.
All right. Now, you had mentioned alpha and beta with regards to mutual funds during the earlier question on risk. Could you explain to our audience what those concepts mean, Mahesh?
So when you're looking at your portfolio, right? So you are looking at the returns. One is the NAV, but what investors are really interested in terms of what is the return, okay, that investment in a particular mutual fund unit will give over a period of time. And the return component of a investment or a mutual fund portfolio or a unit which you are buying can be broken down into two components. One is the beta part of it, and another one is alpha. So the beta means that the underlying market, right, where the fund is investing into, what is the movement of that, right, and how much you are capturing that in your portfolio. So for example, if you're a simplistic example over here, if you're investing into a large cap fund, right, then the market index for that would be say Nifty, right, and a Nifty has given say 10% return, right, then the contribution of beta in the portfolio, assuming you are fully invested, okay, if you are just mimicking the invest, then that should be in line with the Nifty returns. But the endeavor of a portfolio manager is always to generate higher return than the benchmark return, right? And that's why you select a portfolio of stocks which can give better return than the benchmark, and that's the alpha, okay, which a portfolio manager is trying to generate on the portfolio. So the excess return, okay, which because of your stock selection away from the market, okay, which you are able to generate on the portfolio, is called the alpha, right, which the portfolio manager is trying to generate. And the alpha can be positive or negative depending on how good the stock selection is. So that's how you get the total return breaking out. So normally you would see the funds over a longer term period of time would have beaten the benchmark by say around 1 to 3 percentage points. And then excess return, what is there is the overall net alpha, okay, at the portfolio level, which that fund is generated over and above the underlying benchmark for that particular fund.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.